One now, Mr. Reichert.
Thank you, Mr. Chairman. I want to add my thanks to you, too, for pushing forward with tax reform over these last 3+ years, and in fact, thanks to the entire committee, because this has been a bipartisan effort, over 40 hearings and meetings after meetings after meetings after meetings on tax reform. And so it's been a little bit in contrast to some of the other major bills that were passed in previous years, but this is an effort to reform the tax code. And people on this committee know how hard that is. You certainly know how hard that is. Since 1986, we've been, hoping for this. People in this audience know, and I think the people around the United States understand how critical this is and how difficult this is. But the whole goal here is to create a tax reform bill that energizes business and, as Mr. Brady says, creates jobs. And that we don't work for the IRS any longer, but the tax code works for us, right? That's the goal. So there's a couple of things that I want to touch on, Ms. Zelisko, both in your oral and written testimony. First, the need for the permanence in the R&D credit from the U.S. for the U.S. to be competitive on the international level. And second, your concerns that eliminating supplies and computer software from the credit might have unintended consequences. On your first point, in Washington State, we don't have to look too far to see what other countries are doing to attract R&D. You may already know this. In Canada, not only have they reduced their federal corporate income tax rate to 15%, they have now a permanent 15% credit on research and development activities that applies to all expenditures and special accelerated depreciation rules that apply to so-called research assets. And on top of this, the various provinces and territories have added their own research tax incentives. For example, in British Columbia, right above the state of Washington, there is now a 10% credit for all companies on top of the federal incentive. On your second point, the unintended consequences of removing software and supplies from the credit, we've heard a couple of things. That no other country in the world specifically denies R&D credit eligibility for all software costs, and secondly, for manufacturer supplies such as test models can be an integral part of conducting scientific research. Could you please comment on both the importance of the permanence in the R&D credit to stay competitive on an international level and the potential unintended consequences for removing expenditures on software and supplies for the tax credit?
Yes. With regard to the United States has the opportunity to lead once again in this area. We did in 1981. But that recent OECD study ranks us now 22nd as far as the incentivization that the R&D credit provides here in the U.S. when it is in play. So I think, therefore, making it permanent is going to really accelerate and innovate and provide the incentive for businesses to plan, to be able to decide that we're going to be able to do that extra project as a result because we know that the cash flow is going to be there and it's not going to be on again, off again. So I think with regard to that, ranking number 1 in 1981 and now 22nd now, I think obviously says something that we need to basically take notice and lead as opposed to trying to catch up. So in that regard, with regard to the amount of items that should be allowed as far as qualified research expenditures, having supplies and software being part of the equation, which it was until the proposal here that we have before us, that I think is important. Supplies are critical as far as when you're doing research and development. Obviously, wages are the majority, as evidenced by the research and development credit. 70% of all expenditures relate to wages. But that means the 30% relates to supplies, not an insignificant amount. So I think if we want to be competitive, as opposed to regressing and taking a step back, I think retaining the supplies as a deductible, as a qualified research expense for the R&D credit is so important, along with software. Software is critical. Look at the developments of the companies that we've had here in the United States where software development we lead that in that forefront. I think we want to retain that.
Thank you. You bet.
Gentlemen,